Hello and welcome to Kotak Stock Shala video on screening process. We already did one video on how to understand different parameters and how to actually deep dive into different companies. And then we dissected into how to use Excel for core portfolio screening process. Now this video is all about satellite portfolio, and if you look at the screen, I do 70% in core portfolio, which is long-term compounding portfolio, and 30% is where I want to find new sectors, new opportunities, new companies which are just emerging. They might not be doing great in the past. They might be having some powerful four-cylinder model earnings growth trigger for the future. Now, if you apply a fundamental screen to it, and if you look at hindsight, you will not find anything in that company. In fact, those emerging companies will not even come into your screen. So how to actually identify companies which are emerging, which are coming up just in the trend, or there could be a sector which is just emerging out of nowhere. It is turning around, or there might be tailwinds that get started into that, or there are companies where there are so strong triggers which are not possible to find it in the past. So to do that, I blend fundamental analysis into it. So the idea is very simple. We want to find companies where there is a spike in the price and spike in the volume. Now, what does it mean? Now, it means that there is some kind of price volume action in that company. So I want to find a trigger. I want to find after that whether there is any kind of earnings momentum into it, whether there are earnings which are increasing, are there any triggers around it or not. And the idea of this satellite portfolio is to find new emerging sectors, generate alpha, and find emerging winners rather than the past winners. So this is what pretty much we do in satellite portfolio, and you can play all the kind of cyclical stocks in this. So whether it is steel sector, metal, sugar, hotel, oil and gas, textile, any kind of special situation, turnarounds, all these things you can consider riding or screening through this particular way of screening. Now, the first step, what we want to see is whether there is any kind of spike in the price and volume. I'm showing you a past historical 2017 data just for you to understand the concept. Again, whatever examples I'm showing you, it's not recommendatory, and that is the reason I'm showing you all the past data. But the same thing you can do with the live data also. So this is a 2017 data analysis where if you see for so many months, this company called as HEG was not going anywhere. In fact, it was going down and it was having a very small volume as such. Now, suddenly what happened was there was a spike in the volume and spike in the price. Again, there was a spike in the volume, spike in the price, and this company had suddenly saw some big demand coming in. So what price rise suggests, along with number of transaction that is increasing or the volume rise that is increasing, it shows that there is sudden demand among the investor community. Now think about it. Why would some company will have sudden demand for it to be bought? Generally, market is very smart. All the market participants are very smart. They know that something is going inside the company. There might be some trigger inside this company, and we have already learned about four-cylinder model analysis. So there could be sales growth trigger inside the company, or there could be utilization that is increasing, or there could be operating leverage that is kicking in, or there could be margin improvement, or there could be debt reduction, or combination of all four of these. So essentially market is seeing that, hey, there is some probability that the earnings in this company will improve from here, rather improve drastically from here most of the times, and that is why people are buying it and they are interested into getting into this company, right? So to identify this, what I do is I use a tool called ridewinners.com, and there is a tool called Screen over there, and that gives me list of companies where there is this kind of spike in the price and volume. Now once that is done, I basically do tranching, right? So I take a small tracking position and then I use the exact same four-cylinder model analysis which I told you how I analyze earnings growth. I go back to the drawing board. I try to find out which trigger is playing in this company. I try to understand what is happening in this company. Now, many times what will happen is, like how I showed you in the right winners initially, there could be one big sector that is coming up. Like for example, in the screen, PSU Bank is showing price action across the sector. Okay, so many times not just one company but many companies in the same sector also might pop up in your screen, and that will give you more conviction to hold that particular company. So this is where, what we did initially was top down approach. This could be considered more as a bottom up approach, where we start from a price action in a company, then we see whether there is a sectoral price volume action, and then we want to test the waters and do the fundamental analysis out of it. Now, technicals will tell you when to enter and when to exit. Fundamentals will tell you what to buy and what is a good company to buy. Right? So blend of both of these things will give you a powerful edge, where you will not only know whether this company is good or bad, whether you will not even know whether it is a good fundamentals or not, but you will also be able to understand where to enter and where to exit, which is a very, very powerful combination, because business analysis only gives you what to buy, but it doesn't tell you when to buy, and most importantly, when to exit. So I'll just enable this indicator which I use, and I'll just show you how, with the use of technical analysis, I decide my entry exit. So wherever it is like this green zone, I would like to ride my stock for the entire period, and as soon as it becomes like red like this, I want to probably exit it. So this is how we connect the dots with what is there in fundamentals along with entry and exit of technicals. Now, there is a very powerful concept called stage analysis, which I'll be covering in the next module, where you learn how to find such growing businesses, what are different stages in which these growing businesses go through, and how to actually make sense of it. So we'll revisit this again when we do our growth analysis and how to grow in your journey and how to find those growing businesses. But this is all till now what you need to learn and understand. So thank you so much again for being with me so far, and hope you got some powerful ideas. What we learned in this section is the concept of price volume action. We understood with example how it looks like, and we understood the importance of blending fundamentals and technicals, and how you can spot emerging companies through an emerging sector combination. This is all we learned in this particular video. Hope you got some powerful insights, and hope you would like to practice it one more time before you go to the next video. So thank you so much for watching. I'll see you in the next video. Bye-bye.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.